Hi, this is Randy Finney with the right side of the chart, and this is a closing market wrap for Thursday, January 3rd, 2019. So today it looks like Apple, one bad apple spoiled the whole bunch. At least, one day, and again, always, as I say, one day doesn't make a trend, but it certainly dragged down the tech stocks. Now, interesting to note, Apple was down an impressive 10% today, but yesterday in the trading room, right after I wrapped up yesterday's video, I posted the comments that you have to look at it this way. How much of this 37% plunge from the highs to the lows down here on the previous low back on December 24th, how much of that 37% plunge was already pricing in what was announced yesterday? Now, I am a very firm believer, and I think if you've traded long enough or even invested long enough, you know that the headlines will always follow the charts. In other words, most fundamental variables, most, not all, but most are priced in, fully or mostly priced in, and that's what I'm trying to get here with Apple. It obviously wasn't fully priced in, but we've only dropped, today took us down about 3% below where Apple bottomed on the 24th, and the headlines are pretty ugly. And the reason it carried over to the rest of the tech sector, they talk about slowing, they said they were caught off guard with a slowdown in Chinese sales to China. So obviously that spilled over elsewhere. But let's take a look at the charts and see really, where we might be headed. And again, I don't see, and I mentioned that this morning on the site, and despite the red close we had, nothing has changed from a technical perspective on the broad markets. We're going to get to those in a second. Apple has fallen to pretty decent support. Right there, you can see these reactions from back here in early 2017. This is a weekly chart. So now we're at support. The most oversold Apple has been in over a decade. This is a 10-year chart, and there's only been a couple times the stock has tapped that 30 level on the RSI on the weekly chart right here, and you can see a strong rally, even though that was in a bear market of its own. Even though the stock market wasn't a bear market, Apple was 34% drop off the highs. But again, you had a very strong kickback rally along the way. And of course, you had a couple of oversold readings here, that second of which ended that 45% bear market. So Apple can sometimes do its own thing, and I pointed that out before, as this chart clearly shows you. Apple has had really three bear markets in the last decade, up at the point where the broad market, the stock market, hadn't had any. So anyways, that's Apple. It's one company. It is one of the largest components of the NASDAQ 100 and the S&P, and it certainly had an impact today. But I did want to point out that it's oversold at support. And again, most importantly, is as god awful as that news was yesterday, I know it caught a lot of analysts off guard. It caught the street off guard. But again, it took us down about 3%. Doesn't mean the downside is over. I just wanted to put it in perspective. And now let's get to the charts here and take a look at those. The charts of the broad market, that is. We'll start out here with QQQ. Really, again, nothing much has changed. This is since the lows on the 24th. We've had virtually every day is positive. This red candle right there, we closed slightly flat. I think it was just a fraction of a percent low. You can see the previous candle right there. So we closed that day on the 27th. So this is really the first down day, and it's a good sized down day, but relatively speaking. What am I talking about? We can throw up something like the ATR, average true range. This is the indicator down here, and it shows you the daily price swings, and you can see that the ATR has soared. So this market, it's typical. What the norm is right now are 3, even 4% intraday price swings. I'm not trying to dismiss it. It was a down day, but when you have a down day, did it smash through support? Did it break down from a bearish chart pattern? Was there a big bearish candlestick or anything along those lines? And so far, no. In fact, let's just look down. Let's zoom down to the 60-minute charts. Here's the same trend lines I focused on. So we broke down. Again, we're below this uptrend line here, but we came in, as I think I mentioned yesterday, and back tested on that, continue to back test on this downtrend line right here and closed right on it. And we also hit, I think I mentioned, some fib levels that I wouldn't be concerned until they were taken out. And that would be at least the 50 or 61.8 Fibonacci retracement. What I'm talking about is a move from the bottom here up to the recent highs. right there. There's a Fibonacci line, so you can see we closed right on that 50% retracement. So this is just a typical counter trend pullback so far. Again, that doesn't mean it has to stop here. It just means that's all it is at this point in time. So really, as I study the charts, I don't see anything. We still have the PPO 9 EMA, which is a trend indicator. The signal line is still above the zero line, indicating the trend is bullish. Sometimes you'll have it come back in and hit that zero line and bounce. But as of now, like I said, I'm viewing this as a pullback and a back test, and we'll get to the futures in a second. So there's QQQ. On SPY, we have SPY coming down to right around just below the 38.2%. And here are the Fibonacci levels over here, and you can see the dashed lines or the dotted lines coming across. So we closed a little bit below the 38.2% retracement, which again is just a run-of-the-mill pullback if this is just, if we're still in the early stages of an uptrend with more room to run. And you can also see that we back tested that trend line from above. So there it is. Like I said, there's conflicting analysis, if you will. You have the uptrend lines that were broken, and that triggered the sell-off there. Okay, sorry about that. I had to pause the video for a phone call. So that's it. Basically, back test. We'll see where we go with this. About in between the 38.2 and the 50% retracement. PPO signal line is still above the zero line for now. So this one will have to be continued tomorrow. Okay, and a quick look at the futures. This is ES 60-minute chart of the S&P 500 index futures. I should extend that downtrend line a little bit. So you can see similar story with SPY and QQQ. You have a downtrend line which was broken out, back tested, and we're still above the downtrend line right now. We had the bearish rising wedge, which I highlighted, and what happened there, again, this was all covered in yesterday's video. We broke down, had a pretty shallow breakdown. They gunned the market higher, came up, back tested. But as I mentioned yesterday, this is a level, and I'm still awaiting a buy signal on a breakout above 25.22, we'll call it 25.23. Lots of reactions there so far, so we're still watching this level. And unless that level goes, that's our next buy signal we're looking at in the market to take me up to the upside targets here. Some other developments worth noting today. We'll see what happens. Again, we're still in a near-term downtrend right now since being rejected off these highs, but we have a potential divergence right here. You can see it forming. Just like we had negative divergence at the highs, we had a divergent high at this point. Prices continue to make equal highs. That extended the divergences right here, and so far they're starting to play out for that pullback there. But again, we have potential, not confirmed. Want to see this PPO turn back up, make a bullish crossover. Want to see the RSI turn back up. There's certainly the potential. Let's just take this line away for a second and extend the downtrend line. Maybe in the overnight session, maybe we pop down, come in here, one more test of that trend line, and there's room to extend, go a little bit lower and keep these divergences intact. That is ES. And before we wrap this one up and get to NQ, and then I'll wrap the video up, let's just look at the fib retracements. They should be similar to SPY, and they are. I think we're about a 38% on ES here. So there's the lines. I dragged that one a little low, but yeah, you can see right there. We're right on that purple line is a 38.2% Fibonacci retracement. Again, that's off the move from the December 24th lows up to the highs. And now let's look at NQ, and we'll wrap this up. Okay, here's NQ, also on the 60-minute chart. Let's bring this trend line down a little bit now. Same story. I mean, they look almost identical right now, ES and NQ. So we had conflicting patterns and developments in the charts, if you will. Again, you had the bearish rising wedges, which broke down night before last and then ramped up. We had that ramp up yesterday, which back tested. As with SPY, this is a level I said we have to watch. We still need to watch break above 64. We'll call it 64.09 to be safe. Look for an impulsive break. That should open the door for a move up to any of these upside targets here. And also, as with SPY, we have potential, still unconfirmed, but potential bullish divergences right here. There's the PPO. Want to see that turn up, just as with SPY. our ES, there is room for a little more downside. Maybe we come in and maybe back test this downtrend line like that. Maybe not, but we don't want to see it go much. I don't want to see it go much lower than that. That starts to really call the rally into question if we start taking out these previous reaction lows. And finally, let's just look at Fibonacci retracements, see where we're at. So again, that 6408.59ish level is several failed attempts at that level so far, several reactions, and that is the recent highs off the lows. So I threw up the Fibonacci's here, and you can see that we're not even down to the 50% retracement level yet. We're between the 38 and 50. So as far as pullbacks go, as impulsive or as impressive as a three, what did the Qs do today? Qs were down 3.27%. Again, it's just more of the norm with these big moves lately. You can see it on the chart. It doesn't really pop out as an unusually large move here when you look at what's gone on the last few months. So that's, again, the new norm, at least for the time being. So those are some levels to watch. And again, where this the current rally really starts to come into jeopardy, in my opinion, and I believe I mentioned this yesterday, is around here. We have this previous reaction low, which is right at that 61.8% Fibonacci retracement level. That's around 6440 or 6044 on NQ. Again, that would be the 61.8 retracement from the December 24th lows, excuse me, all the way up to the recent highs here and here as well. So that doesn't mean we can't go below that, but that's just typically, usually when you have a counter trend pullback or a counter trend rally during a downtrend, that's usually about the extent of what a normal healthy corrective wave will take you back to. So those are levels I'm watching, and we'll have to pick this up tomorrow. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.